In today's update, we're going to focus on the pre-bull phase, which tends to occur in a pre-halving year, but transitions into a halving year of 2024 to begin a two-part bull market phase, which is spread across 2 years. We'll be talking about that through the lens of the 4-year cycle. And this is simply the cheat sheet that you can't forget on this current retrace in the Bitcoin market. So we'll be talking about that in a lot more detail. Subscribe to the channel for more videos like this in the future, and let's dive right into it. So a year ago, we were talking about this 2023 pre-bull phase where we tend to see a lot of consolidation, and that has been the case across each pre-halving year. Lots of consolidation in 2012, 2015, bear market consolidation and accumulation at the bear market lows. In 2019, we saw the pre-halving first uptrend and then downtrend in what was essentially macro accumulation. So if we focus on 2015, this was sideways accumulation near bear market lows. Here we saw sideways accumulation break out into that first uptrend and then correction in a mean reversion attempt at essentially revisiting the same lows from the 2019 bear market bottom, 2018 bear market bottom as well. So these lows were essentially revisited in the halving year of 2020, but typically pre-halving years is where we see consolidation, more in a sideways sort of non-volatile manner, more in a macro accumulation manner where we see longer and broader swings, but also in a sideways manner, which is a little bit more controlled. So 2023, really similar to 2015. 2015 was where we saw accumulation at the lows, and 2023 seeing accumulation really at the highs after recovering from the bear market bottom of 2022. But this 2023 phase also always precedes the first pre-bull phase, where we tend to see a lot of upside and lots of volatility, but still in the grander scheme of things, it is sideways price action. 2020 as well. Aside from the COVID crash, we saw lots of sideways price action, but it's this sort of sideways price action that enables that parabolic rally going into the next second bull phase, which is 2021, 2025, 2017, 2013. 2016 also showcasing us lots of sideways and boring price action. 2020, 2012 as well, but near the end of the year we start to pick up, as you can see in each of these halving years, and at the moment we are pulling back in this 2024 year, but near the end of the year probably we're going to see the very beginnings of that parabolic phase to get us into that final and second bull phase where we see new all-time highs and beyond. 2017 also a great example of that. 2013 fantastic upside as well. So these are some real important golden charts that we can't forget during this Bitcoin crash. Really important to understand that these phases represent the 4-year cycle, number 1, 2, 3 and 4. You can see how in this bear phase those represent the candle 2 right over here. And in this phase, the pre-bull phase, those are the pre-halving years. So you can see that they represent candle 3 here. And in the halving year, which we see over here, this is the first bull phase, that represents the candle 4, which tends to break a 3-year resistance and hopefully turns it into new support. And sometimes we see that retest occur early on in the candle 1 year. The candle 1 year being the second bull phase right over here. So we are waiting for candle 1 essentially, but candle 4 is already occurring. It's already enjoying some upside, and as long as it closes above the 4-year cycle resistance, this 3-year resistance in the 4-year cycle, the 4-year cycle being overall these 4 yearly candles, the 3-year resistance is 46k at the moment, and candle 4 this year in 2024 needs to 12-month close above here to essentially kickstart what was essentially additional upside going into candle 1. And we tend to see that candle 4 sets up candle 1. And of course, we do see diminishing returns over time. But the main thing to keep in mind is that we're still only in the halving year. And the halving year is represented in this part of the cheat sheet: the first bull year, the first part of the bear market, and then the second part of the bear market comes in 2025. And it's really important to keep that in mind while juxtaposing also this cheat sheet right over here. Because if we focus on each of these halvings, here depicted in vertical blue lines, then before the 2016 halving, we can notice that it was 547 days before the 2016 halving where we bottomed in the bear market for Bitcoin. And just notice that if we do a mirror image of this, then you'll notice that after that 2016 halving, it took roughly the same amount of time to peak in the bull market in 2017. So 518 days after the halving, but essentially almost equal amount of time in the pre-halving period when we bear market bottomed to the post-halving period where we bull market topped. It's roughly the same amount of time. The halving acts as a mirror in that respect, where we have a similar amount of days pre-halving and post-halving when it comes to bear market bottoms and bull market peaks. So 547 days before the halving is when we saw a bear market bottom in 2016, in 2015, and 518 days after the 2016 halving, we saw the bull market top. And it's a very similar story when it comes to this situation in 2020, where the 2020 cycle, 517 days before the 2020 halving, we bear market bottomed, and then 549 days we were already at the bull market top. And you can have a look here that we can just do this all day, really, comparing pre-halving and post-halving periods across each cycle. Really, they're roughly the same amount of time. When it comes to 500 days before the halving, we tend to see a bear market bottom. Roughly 500 days after the halving, we tend to see a bull market peak. And that has been the case before the 2016 halving and after the 2016 halving, before the 2020 halving and after the 2020 halving. And when it comes to the 2024 halving, once again, 517 days before the halving is when we bear market bottomed. And now 548 days after the 2024 halving is when we should see a bull market top based on these historical tendencies that we've seen here in the past play out already, which means that we'd get to a bull market peak of October 2025. So now being in September, only the beginning of September, that means that we have just over a year at most still to enjoy this bull market before we finally see a peak in Bitcoin's price action. So if we were to really just compare where we roughly are at in the cycle, then in 2020, here we are. This is exactly where we're pretty much in the cycle. And the same thing here, if we were to do that in 2016, this is roughly where we are. Of course, we were uptrending at this same moment in the cycle in the post-halving of 2016 and also in the post-halving of 2020. Right now, we are still technically consolidating right over here, but this is generally the area that we should be focusing on, that we're trying to essentially transition into this parabolic upside phase of the market cycle. And that's something that still simply remains ahead for Bitcoin. But nonetheless, really important to remember this mirror image that the Bitcoin halving can act as when dictating where could we potentially top in this cycle. This has been a recurring tendency across time, and it's one we can't simply forget. And if it's this chart that you forget somehow, then at least don't forget this chart where we see all these market cycle phases across the years: bear, pre-bull, first bull, and second bull. We're in the first bull phase of the bull market, ready and getting ready, preparing for the second bull in this bull market. Going into 2025, we have to simply weather the storm that we're currently in. And just to give you an idea as to where we are market cycle wise, in 2020 we were still moving sideways going into the end of the year. In 2016 we were still moving sideways going into the end of the year. 2012 gave us more than anyone would have bargained for, retracing at the end of the year, but going into the end of the year was really exponential in the parabolic rally. But we got that consolidation in 2013 on the other hand. So if you see some rallying going into the end of the year, then we have to mean revert and consolidate after that sort of rally. So it's better to see consolidation and not much price action and lots of boredom in the market going into the end of the year, because that's going to prepare us for that parabolic phase in the market cycle. So I would prefer, in fact, to consolidate here going into the end of the year before taking off into 2025 and having a strong 2025 year. So really important not to lose sight of where we are in the market cycle, and also important not to lose sight of where we're heading. And we still have over a year left in this bull market according to history, and I prefer to believe in what history says because historical tendencies simply, when it comes to Bitcoin, they tend to repeat across all market cycles, and as long as history repeats, we're simply in good hands when it comes to Bitcoin's price action and the bull market top that still lays ahead in the coming months. Thank you so much for watching. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. I'm Rekt Capital and I'll speak to you in the next one. Speak to you soon.